So today we're gonna analyze Activision Blizzard. That's a computer games company, and they make games such as Call of Duty, Diablo, World of Warcraft, or Overwatch. And this company is at a very peculiar moment in its history. So we cannot really analyze it as we would any other company. We have to look at it from a different perspective. And I guess the best person that can explain this peculiar situation is an owner of 9.5% of the company, Warren Buffett.
One of the things I bought was bought for a different purpose by a different manager months earlier. He bought roughly 15 million shares of Activision. And I never paid, I knew about the company, but I would just see it at the monthly report. But then on January, 17th or 18th, something like that, Microsoft announced they were going to buy Activision for $95 a share. Now, when they announced that, at that point, Activision becomes a different kind of security, whose value depends not on what the market price does, but whether a given corporate event occurs, an announced corporate event occurs. Well, Microsoft wants to buy Activision, we'll say. Well, they said at $95 a share. And they've got the money. And obviously, mergers and big mergers, tech companies, all kinds of things, have got all kinds of problems. So you don't know what the Justice Department will do, or you don't know what the EU will do, and there are all kinds of things. If the deal goes through, we make some money, and if the deal doesn't go through, who knows what happens.
So it's an arbitrage situation, and Warren Buffett is in. He bought 9.5% of Activision. And if we buy at the current price, we have a chance of around 23% gain if the deal goes through. And they're predicting that the deal should be closed around June 2023. But as we know, it's not a sure thing. Just recently, we had the whole saga with Twitter and Elon Musk, and it seems that the deal is dead. So what will happen with Microsoft and Activision? You never know, but there is a potential of a serious gain. But is it only that? Is it only the arbitrage situation? What if it doesn't go through? Are we stuck with a company that is really worthless, or at least not worth as much as we paid for it? Or do we end up with a decent or even a good company at a fair price? So let's find out. First of all, investors, are there any insider buys for Activision Blizzard right now? So that's an X, but actually there are a number of directors who are buying, just the majority of them are selling. So it's a mixed situation. What about super investors? We know there are a number of them, but the biggest one and the most committed one is Warren Buffett. So what about the fundamentals of the company? Return on invested capital, that's an X, but it's 9.6%, and we are looking for a return over 10%, so this is really, really close. What about free cash flow growth? That's a check, but also this is only 10.2%, and we are looking for a free cash flow growth over 10%, so just over. So we are balancing on the edge here. Share buybacks, that's a check, and it's a very impressive check. That's almost 30% of shares that they bought back in the last 10 years. So this is really great. This really adds extra value to you as a shareholder. What about dividend yield? That's a check. They pay out dividends, but it's just 0.6%. So we can see that still they are mainly investing in the future, into new games, new projects, and the dividend is just something extra. But they are still growing and maturing as a business. What about the debt? Well, that's a check because it would take them 1.5 years to pay the debt with their current free cash flow. And we are looking for a number below 2 years. So generally it looks like a really nice company. Nothing incredible, but really nice, stable, and the share buybacks are great. What about the PE? So the current PE of Activision Blizzard is 24.5, and the 5-year average PE, that's a check, is 51.8. So we can see that the current PE is 50% lower than the 5-year average PE for this company. And what about the PEGI ratio, which is a PE divided by revenue growth plus dividend yield? Well, the revenue growth is 6.4% and the dividend yield is 0.6. So if we divide 24.5, a current PE, by 7, which is revenue growth plus dividend yield, well, we get an X because the PEGI ratio is 3.5. And what we are looking for is a PEGI ratio below 1, because that would mean that the revenue growth and the dividend yield combined are worth more than the current valuation. Okay, so let's value the company with a discounted cash flow formula. Okay, first we have to estimate the growth rate for the next 5 years and then another 5 years. And we will make 3 assumptions. So the low estimate, let's say it will be 8% for the first 5 years, and then they would keep it at 8%. The medium estimate, 10% and another 10%. And the high estimate, let's say first 5 years, 12%, and then from year 6 till 10, 15% growth. This still is a growing company, so we can assume such a growth in the next few years. So what is the value? Well, as you can see, it's mainly red. Only if we believe that the high estimate is right, we have a chance of buying it at a discount, because the intrinsic value is somewhere between $54 to $81. But if we add a margin of safety, and I always do that, I use 30% margin of safety, then we should be looking for a price between $37 and $57. And the current price is $77. So this really doesn't look like a buy if we just think about it like any other company on the market right now. But we have to remember, this is a different situation. This is an arbitrage situation, because if the deal with Microsoft goes through, then okay, we pay $77 for a single share. But in June 2023, we should get $93 for the same share. So that's why it's really tough to say, is it a buy? Because it seems like a good company that is a little bit overpriced, but at the same time, if the deal with Microsoft goes through, you get around 23% gain. So it's really hard to say, because it depends on your way of investing. So in this case, you should not only do your own due diligence about the company, but also about the whole arbitrage process and the chances of it going through. And also you have to answer yourself, is this for you? Do you want to invest in growth or value, find compounders, or is arbitrage something that you're interested in? It's a different kind of game in a way. So that's it for today. I hope this video was helpful. If so, then please like it, subscribe if you haven't already, and see you in the next one. Bye-bye.